What's up, everyone? Welcome back to Money Market Truths. I am Mark, and this is my co-host.
Hi, guys. This is Mo from OTB Clubhouse.
Hopefully, you guys had a wonderful week. We have a certain format that we're going to start sticking to, so let's get straight into it. Mo, what's going on? How was your week?
The week was awesome, man. And one of the things we actually wanted to talk about was going full-time as an options trader. I've been doing options for the last 2 years, and I always get this question from people that are working a full-time job or people getting off of school, and they want to know if you want to go full-time, basically quit your job or not look for a job and do this full-time. And I thought this was a perfect topic to bring in because, Mark, I think this is something that you can speak on because you've actually gone through the process yourself, doing this full time and doing this with your job. I'll give my comments after you talk about your story because you've had a firsthand experience about it. So
yeah, I definitely did. Yeah, so most of you guys, if you follow me on Trading with a Dummy, which is my YouTube channel as well, separate from what we're doing here together. One of the things that I decided to do was last year around May, I walked away from my 9 to 5, which at that time was the military. I did 15 years. I did get a retirement check. So I was in a position where we prepared for this. Probably 6 months prior, I remember I had a conversation with my wife. This is like during the pandemic. I had a lot of time to sit at home. I could actually do my job. So that's how I learned about the stock market, investing and trading and etc. But I knew that I had a passion in this. I really enjoyed it. But if you guys remember 2020, it didn't matter really what you got into. Everything was going up. So I thought I was really good at trading and really good at investing. So I spent hours on end studying, reading books, doing whatever I needed to do. And then I had a job opportunity, which would bring me to Colorado for 6 months. I had spoken to my wife about this, and I was like, hey, I think this would be a great opportunity because I'm not going to be doing what I was doing in regular Air Force. I would be head of education at the headquarters in Colorado. And I would be able to have a regular schedule, literally from 9 to 5 p.m. It was telework, and I would be able to actually sit every single morning, wake up at 6 in the morning and trade because of time zone difference.
Yeah.
And I was like, I'm going to learn, I'm going to master the skill of trading. I'm going to save up as much money as I can from investing and trading. And then when I come back home to Florida in May, I am going to get out of the military on a full-time status. My wife was for it. I went and I did that. Obviously, 2021 hit and the pullback happened, the correction happened, and I did not exit out of many of the positions that I was in because I did heavily over leverage on options at that time. Because again, 2020 just kind of seemed like whatever you got into, it was going to go up. So I lost a lot of my gains. And when I returned back home, I was at a crossroads, right? I lost all the money that I had made during that time when I was in Colorado, but fortunately, I was gonna be able to semi-retire and have a consistent paycheck come in every single month. Our living expenses was really low at the time. We paid off all our debt, so I was in a pretty comfortable position where I did not need to work anymore. But we just had to adjust our lifestyle somewhat, meaning like we can't just go out every single day and get Starbucks. We can't just go out and eat out every single night. Like we would have to budget. But my wife knew how miserable I was in the military at that time. So she was down for it. She had a job during that time as well that she hated. But we said, you know what? Go ahead, get off of active duty and you can trade full time. And that's what I did for a good part of 6 months. And it was hard. It definitely was hard. It wasn't as easy as I thought it was. It put a lot of pressure on me because now the money that I'm making on a daily basis, whether it's on options or futures trading, we kind of relied on that. That was like the additional income that I needed to pay off bills, to go out, to do things, put my kids in activities. And that additional pressure, I think personally, for me at least, interfered with my success in trading because I had so much additional pressure on me where I was like, I need to, I cannot let this, for example, if I get into option position for a weekly, for example, on a SPY, that's $70. That $70 could run up to $400 or $500. But I was worried about losing that $70. So when I would get in a position and it would dip down to $60, I would immediately exit. And then I see that position go up to $300, $400, which is $400. And that consistently happened with me. And it was because I just couldn't afford to lose the money and put that much risk, which again, put a lot of pressure on myself. But we were doing all right. We were doing perfectly fine. And the reason why I'm mentioning this is because there are a lot of gurus and experts and YouTubers out there that are always telling people you don't need a 9 to 5. You can just quit your job, you could trade, and it's super easy. And for some people it is easy, for some people it's not. But it's about the pressure and how flexible your job is for you to learn this process. Because I'm telling you right now, if you're thinking about just quitting your job, going cold turkey, and learning how to trade and how to invest long term, whether it's options or futures, you're gonna wake up to a rude awakening because it's going to be very tough for you. So just moving forward, once I think it was in December of that year, I end up getting a job offer, which offered me a ridiculous amount of money at that time. And I was conflicted. I was like, well, I'm trading, we're doing just fine. But this job will offer that additional secure paycheck that I will get on top of the paycheck I already get every single month. So I would get paid every 2 weeks. And the benefit that I had again is that I had leverage at this point, right? Because I didn't need the job. I did not need the job. So I had certain stipulations. One of the stipulations was I want to be able to trade from 9 a.m. to 10:30. And I want to bring my laptop into work. And they were like, that's fine. They're like, also, we're currently teleworking. So we don't see a problem with that. So it benefited me in the sense that I got to be at home. I was able to telework. So I was able to do my job and trade and still learn about the stock market at the same time. And that completely changed the game for me because now I wasn't too worried about losing $70 in a trade. I wasn't too worried about taking a loss today and then not having that additional pressure that I need to make sure that I win the next day, the next day, the next day. Like I can't afford any losses. I was able to focus a little bit better than I did in the past without having that job. Now, that being said, you have to put yourself in a position where it's beneficial for you, in my opinion. Like if you work at, like, no shade on anybody who works at like McDonald's, but if you work at McDonald's and you're getting paid minimum wage, you might not be able to afford just to quit your job like this today and then just trade full time. Because what if you end up losing a lot of money or blow up your account? What are you going to do then? You're going to be stuck in this hard position in your life. And if you're married or if you have kids, you have other people that you have to be accountable to as well. So I would say that stop listening to this, I guess this false narrative that you can just quit your 9 to 5 to trade and invest. You can do that. Just know that it takes time, that you have to perfect it because it's really more about consistency than just having, one great win out of, 6 months that offset the losses that you had, because you're going to take that emotional toll as well. And again, it's that pressure of having to support your family as well as yourself. So it just kind of just depends. I would say that the best thing to do if you want to be a full-time trader, if you want to be a full-time investor, well, investing you should do, period. You should take a portion of your paycheck and just, invest it. But if you want to be a full-time trader, my recommendation is set yourself up where you can afford to lose X, Y, and Z amount of money. Meaning that if you are working at McDonald's and that's the only skill that you have, don't focus too much on trading right now. You need to focus on getting a skill which will allow you to get a different job that pays you well for you to potentially work at home. Because there's so many jobs out there now that give you that flexibility to work from home, such as teleworking or remote. So maybe go to like the local community college or get a certificate in some sort of IT, Security Plus, or whatever it is, and find yourself a job that pays you better than McDonald's, where you can then work from home and still have the time to be able to trade versus just completely going cold turkey, quitting your job, and then hoping that you will become a successful trader. Because again, it is possible, but you guys have to remember that 94% of people fail at this. And I think a lot of it has to do with that unnecessary pressure that we put on ourselves because of something that we really want to do. And if you really want to do this, it takes a lot of work. What's your thoughts?
Yeah, man, I completely agree with you. And this is why we wanted to talk about it. I think the ultimate goal for most people is freedom. And oftentimes people think working a job is contrary to freedom, which is not true. Sometime working a job, depending on what job it is, can add to that freedom, if that makes any sense.
Mhm.
And what you're talking about is honest and authentic. And that's why I wanted you to talk about it, because here's someone who had a plan, and the plan was I don't want to work and I'm going to do it full time, then made a decision to go back to work, which must have been very, very hard because, again, it hits on that freedom because that's what you're being told by the environment and the society that you're a loser if you work 9 to 5 and I'm better than you if I have a business, which is not true. Because a business could be 9 to 9 p.m. and a job could be 9 to 1 p.m. in most cases these days because you're working from home, you're done your shit in 4 hours, and you're chilling. So neither is better, but you need to have perspective on what kind of job, what kind of business you have. In most cases, a job might be better, and in some cases, business might be better. So just want to say nothing is ever black and white, and that's what we wanted to bring that out. My question to you is, everything you said led to one thing: your execution got better because your emotions off the money came out, because now you're not like, who's going to pay the mortgage or who's going to pay for this bill, because you have that monthly check coming in. So do you think you're a better trader with a job or without a job?
So man, it's a catch-22, right? Because sometimes the job does interfere with my trading, right?
Yeah.
Like as you know, like I used to be consistently in your room. Now I'm like not always in there. It's
Yeah.
I'm either in or out. So sometimes that does take a toll on the process of trying to trade, and that's why I kind of shifted more towards futures again, is because it's 23 hours a day. I don't have to necessarily be there at 9:30 when the market opens. I can trade pre-market. I can trade after the market closes. So that benefits me a little bit better. But when I say, man, okay, so emotionally, way better.
Yeah.
I I I don't take any of the losses as hard as I did before. I am not as stressed anymore because I have that job.
Yeah.
And therefore, I feel like I've gotten a little bit more confident in my execution. It's just that sometimes I feel like I definitely miss good opportunities while having that 9 to 5.
Yeah.
But if again, I wouldn't be in this 9 to 5 if I didn't find a benefit for being
Okay.
in the 9 to 5. And I would say this also, like I've also made this very clear to my family, like if I cannot stand this job and if it becomes such a hindrance on my success of what I initially want to do, I'm going to quit. But again, I can do that
Yeah.
because I my living expenses are so low and I have a monthly check that comes in. Plus, I also have other streams of income. That's another thing. A lot of people may not be telling you the truth on their life situations, right? Because again, these gurus or these experts or these sales people, they will always tell you, quit your 9 to 5. I did it. But again, that those are the people who are selling you a course. So they have that form of income that's coming in. I'm sure they may be trading as well.
Yeah.
So they have two incomes already coming in, not knowing, like they're probably selling merch as well. So you're in a different situation. I have multiple streams of income. I trade. I have a 9 to 5. I have a government check that comes in every single month for my retirement. I have a real estate photography business. I have affiliate links that I make a little bit money off of. So I have 5 streams of income right now. So it's a little bit different. I feel like I'm missing one. Oh yeah, I do digital marketing occasionally, depending on who it is. Usually just for friends, but I get paid doing that as well.
Yeah.
So yeah, it's I'm in a very different situation. So, and I want to be transparent about that because I think a lot of people may not be as transparent to tell you, like, this is all I do. I just trade full time. It's very rare that you may find someone that just does that. I maybe know one person, and that's SG, the stock god guy that I
Yeah.
interviewed on my channel. Like he legitimately, that's all he does is just trade. He doesn't sell courses or anything.
Yeah.
So he's the only one, but that's like he works 12 hours. If you guys go on my YouTube channel and listen to the interview, he literally works 12 to 14 hours because you have that perception that, oh, you just come in on futures trading and you just, execute from 9:30 to 10 and then you're done. No, dude, he preps hours prior. He preps after the market. He reviews videos. So it's still a full-time job.
Yeah, and Mark, what you said, it's also a personality type. Like personally, like myself, if tomorrow I was forced to, let's say, stop trading, not have a Discord, not have any of that, I'm okay going washing cars or finding anything possible where I could do myself rather than go back to a job. That's just, I think, because the last job that I had was perfect. It had everything, and we've gone over it from benefits to pay to work culture. It's just a personality type. I can't do it, and I understand that I'm okay downsizing my lifestyle if ever that was the case, then going back to the job. Does that make
Absolutely.
sense?
Yeah,
Yeah,
it
that
does. Because there was a little bit of an ego hit when I took this job because I really like the money was so good. And I was like, man, am I selling out again? I'm kind of going back to what in a similar field of what I was doing for the military. Um, but when I was like, you know what? I believe that things happen for a reason, right? I didn't seek out this job. This job reached out to me because I had a certain skill that they required, and they found me off on LinkedIn, I think. They found my resume somewhere, I don't know, but they reached out to me and offered me the job. And again, I had to leverage because I didn't have to work. So I didn't come across desperate. I was like, I need this, this, and this. Are you cool with that? Yes. Awesome. And I knew that when I came in there, if it was completely not what I expected, and if it completely makes me miserable, I am going to walk away. But it definitely was a little bit of an ego hit because it's like, man, I did not want to work for somebody again. I
yeah,
didn't. I was like, let me see how I feel after 2 months being in this position. It was rough for a while going back again because I felt a little bit like I was a failure. Like, damn, like if I could have only just made this type of money trading, I wouldn't be in this situation. And that's very true. I wouldn't. If I could make over six figures trading easily, I wouldn't have that job. Um, but it definitely changed the way I move forward.
okay,
I don't get stressed out, even on my investment side of things. When I buy stocks and it dips, I don't stress out as much anymore. I mean, it sucks. I bitch about it on
yeah,
Instagram or something, but I don't freak out like, oh my god, like what happens if we need this money right now? Because I don't.
yeah.
So what about you, Mo? I mean, you did kind of the opposite, right?
Yeah, so I basically walked away from a good paying job, and but I didn't know I was going to trade or if I was going to be good at it. That wasn't something I just knew I couldn't work anymore. I can't do a structure anymore. And as much as people say that you can get a flexible work environment, they still have protocol they have to follow, and they're pretty black and white. So I knew that because I made those protocols. My background's HR. I understand what they are, and sometimes they're said, sometimes they're unsaid things. And I don't think it was an ego thing. I think it's a personality thing. It doesn't match my personality, but I know that in order for me to be free, I had to downgrade my lifestyle. And I was okay with that. And everyone in my family was okay with that because they're going to have to go through with it because I'm taking a big pay cut, right? You're going from, I'm going to throw a number, having, let's say 7K or 8K, which is what comes off for 100K year income, to not getting anything monthly. So that's like a big pay, uh, it's a big thing on your um, emotional environment because you, even though you might not be thinking that, hey, I need this, let's say you look at something, you might not need it, but the fact that you can't even afford it because now you don't have a job, that's what takes a toll on you. If that makes any sense.
Absolutely. And then I'm sure your wife probably felt a certain way. She probably didn't say it to you, but she
Yeah.
maybe felt a certain way.
Yeah.
Because again, you're putting everyone in a difficult situation at that
Yeah.
point.
So like basically, so I went to trading after. I never went like, okay, let me quit my job because I'm good at trading. Because what most people went through is let me quit my job because I'm good in trading. And 2021 came like, oh shit, I'm not good at trading. And
Oh,
then
100%.
yeah, right. That's what happened to most people. I just left it. If I found trading or not, I would still not gone back. But we wanted to bring it up and talk about it because it's not black and white. It's a gray area, and it depends on who you are as a person and what sacrifice are you willing to make if you want to just quit and do it on your own.
Yeah, absolutely. Just have a like a serious talk with yourself and have a plan on how to achieve that with the least amount of stress and disruption in your life
Yeah.
and lifestyle. I mean, it's always good to definitely cut back on certain expenses, but definitely you want to ensure that. All right. Do you have anything else to talk about on that subject?
No, I think we covered it pretty well.
All right, awesome. Let's move to the hot topics. What do you want to cover on the hot topics? You go first.
Okay, so Goldman Sachs just came up with an article saying that the companies should prepare for recession. This is the same fund that 6 months ago said that there's a 33% chance we fall into recession. I just want you to look at how fast they're changing the narrative here. And if you are going to wait for some company that has a good self-interest of lying to you, to tell you that there's a recession coming, then it's already too late. My take on this is we're already in recession. And the biggest thing, go grab a book on a bear market or a recession. We have all the signs. Look at the oil prices, look at the price of commodities, food, everything is going up. India was day before yesterday declared that they will no longer be exporting wheat because they cannot sustain the demand. And the whole thing happening with Russia and Ukraine and possibly China with Taiwan, we are, in my opinion, already in recession. We shouldn't wait for some number to hit for us to be like, okay, we're in recession now. Now we need to start preparing because Goldman's saying we're in it, or some bank is saying we're in it. We're in it right now. It has all the signs. We're all suffering from it. Be it go buy meat, go buy fruit, go buy get gas, or go buy a secondhand car. They are up and they're not about to go down. House
Yeah.
prices, look at it, bro. Like we were in Florida, Dallas. We've talked about this. We went from getting multiple offers to now houses doing price reductions. So you could see the real estate's now topping off as well. Go ahead, man.
Yeah, no, I definitely see that with the real estate topping off. I have a friend right now who's looking for a place to buy here in Orlando. I mean, it's still pretty high, but
It
you're
is.
seeing more and more stuff hitting the market now and deals falling through. It was only a matter of time. So I do agree with the recession. We do focus way too much on like where is the ES or the SPY or the SPX going to hit. That will determine whether or not we're in a recession or not. It feels like it. I think we can all agree that it definitely feels like a recession at this point. Gas is up like crazy. If anything, every person, doesn't matter if you're rich, poor, or not, you feel it.
Yeah.
You feel it. And if you don't feel it, I don't know what to tell you. You should be able to see that the price of just gas alone has gone up like crazy, and the demand of cars has gone up like crazy. If like it was a couple years ago, trucks were more expensive than sedans. Now sedans are more expensive than trucks. That's insane. Why? Because the gas prices. Everyone's looking to try to save money everywhere now. So it's definitely kind of gotten a little rough. So yeah, we made. Do you? Well, what's your thoughts, Mo, on the fact that some people are saying that that we're not in a recession yet, right? We're not, but we're getting there. But they don't believe it's going to happen because the market could potentially jump back here in this month or next.
Yeah, so that's what I'm saying. A lot of people look at recession by a definition that was created in the past. Those same rules don't apply anymore. That's one thing. Second thing is we've had all the signs of a recession present now. Why wait for that number to hit, right? We need to start preparing for it now. Someone shouldn't be telling you that we're going to be in trouble for you to start planning. Does that make sense? Like I'm already like in Discord 3 months prior telling people, yo, the prices of stuff's going to go up. Like you need to, and this sounds insane, but start storing dry foods if you can. And I see that news with India and the wheat export, and I already have an inclination that we're not going to have an issue of prices going up only. We're going to have issues of shortage, which is
Yeah.
way worse because what people tend to do, especially in Canada, people were buying toilet paper. And this is when COVID
We
hit.
did
So
it too.
imagine when shit actually hits the fan, right? And then the word shortage gets thrown around, people will start buying surplus because that's how people react.
Hmm.
And that causes a bigger problem.
Do you think people are holding off because they want to hear the mainstream media say we are now in a recession, and that's when they would take action?
Yeah, that's how it mostly works, and that's how people get fooled. Like again, like I said, Goldman 3 months ago said 33% chance that we hit recession next year. To now that we're heading recession, start planning.
Hmm. Interesting. All right. Um, so
They were
the next,
selling. They were selling to us, Mark. We were their exit liquidity when they were saying there's no recession happening. We were buying their shares,
yeah,
meaning whatever they were selling, we were buying it.
yeah. I mean, that's how it goes, right? It's kind of the same sense that I have with crypto. If you notice, did you watch the Super Bowl?
No, but I heard that the amount of marketing that went in for Coinbase and all the other
Yeah,
companies was unreal.
Yeah. So like all of a sudden it's like crypto, crypto, crypto. And one of my buddies sent me this tweet from somebody. It was funny, but I started thinking about it. I was like, this might actually be true. Where he was saying that that crypto topped out when they're advertising the shit out of it on television because
Yeah.
you need buyers and sellers,
So
and
they
they
can leave.
need so they want people to start pouring into it so they can exit out,
Yeah.
market makers, and then
Yeah.
you're stuck with the bag. And no shit, like right after that, I mean, look at it. Crypto's down like crazy now. ADA I think is at under 60 cents now. Last I checked on Bitcoin, I think it was under 30, right? I mean, did it go back up? I'm not sure. I just stopped watching because I have some Bitcoin and it was depressing.
Mark, a Bitcoin can go to 10K and Ethereum
Yeah,
can go to $700. If you don't admit to that or don't already price that in your investment, then there's a problem. You will panic sell because that can happen. Look at Luna, right? I'm not sure if you follow the
I
coin. That
don't.
shit's down like it's down like 99% or something crazy.
Oh, is that's the one everyone was talking about that
Yeah,
basically went to zero, right?
pretty much. Yeah.
And there was like a lot of celebrities that were pitching it, correct?
Yes.
Oh, okay. Hmm. All right.
Imagine you're a celebrity, right? And they tell you, hey, can you post about the shampoo? We're going to pay you, right? That's the general ad. Now, with the crypto, they say, hey, can you send a tweet about this crypto? We're going to pay you $500,000.
Mm-hmm.
Now, their ignorance, it could be ignorant. It doesn't have to be planned deceit. It could be just their ignorance about the product. And they just like, whatever, it's getting paid $500,000 for a tweet or a post. And
You'll do it.
usually
I mean,
you'll
yeah,
do it. Yeah.
you'll do it. Yeah, absolutely. The other subject that we want to talk about again is Elon Musk and Twitter. So it looks like you and I we don't agree on this whole topic. I mean, I don't know, maybe you do now, but remember when we first started, I was saying that I don't trust Twitter now buying into it because if there's any sort of hiccup, it's going to drop to 30 some dollars.
Yeah.
And it did. It did. I woke up one morning and it was down like 18%. And it's all because Elon is saying that he's putting the whole deal on hold right now due to the fact that you know, uh there's some sort of spam bots or something like that. There's
Yeah.
like they're saying that it's less or more. Regardless, every time there's some sort of tweet between him, it ends up actually causing the stock to drop.
Yeah.
So are you still bullish on Twitter?
So I'm never bullish or bearish on it. What I was saying, and I'll still say it, Elon made the investment not as a pump and dump. He was actually had a full intention of buying it. Personally, I think this is the negotiation technique that he's using. He knows how this works. He knows there's bots. He knows that that's not how much the active user base is on Twitter. I think this is for him to get a deal out of this. I
Yeah,
think
to
he's
get
still
it to bring the
those.
price lower and then
Yes.
buy in.
Yeah.
Yeah, and the most recent headline right now is saying that according to CNN, which I don't like to really refer to, but anyways, Elon Musk says Twitter legal team told him that he's violated an NDA. Do you believe that? Do you think he potentially violated the
Probably did.
NDA?
It doesn't matter though. He's Elon can do whatever he want to a certain extent. Like if he can do stuff with SEC, like it doesn't really matter. Twitter's NDA. Like he at this point has basically given them no choice, right? I think he knew what he was doing at every single point. At no point did was I think he was shocked or he was like, "Oh, let me backpedal." He's doing exactly what he usually does, and he's getting his way. I think he will own Twitter at the end of this. But either way, I don't think Twitter is something that you should be buying in terms of stocks at this point. You should be trading it because the play was when the news came and it went from 40 to 56 and then buying dip and then selling it on the top. That was the deal. But now buying it, maybe you buy it at 30, but I personally think there's so many stocks right now that you can buy over Twitter. Like so many opportunities.
Yeah, and that's probably a little bit less volatile because I
Yeah.
can only imagine the people who got into. Look, I got a guy at my job that I work with, and he's like, "No, man, like, Twitter's gonna go to $54. That's where Elon said he's gonna buy it." So he started buying shares at I think he said 47,
Yeah.
and Yeah, I thought it was crazy. I was like, dude, it's like, one single tweet, if anything comes out, this thing's crashing.
Think about this.
And
Okay, so if that happens, it went goes to 40 to 56, big deal. You didn't make that much money. Look at Coin, look at SC. Coin went from 40 to now 70. SC went from 60 to now 80 in 2 days. There's so many other tickers that you can play and make more money now. With problem with Twitter is one news article can throw your technical analysis and flow out the window.
yep.
So it's not worth the RR risk reward right now.
Yeah, absolutely. So those are the two hot topics we want to cover today. And now we're going to get into the education part. I'm going to go over some tickers that I think for price targets to buy in, and then you're going to go over a lesson for trading.
And this by no means is any financial advice. This is just for
Correct.
education and entertainment purposes.
Educational entertainment purposes only. And if you're curious, so I'm unlike other people, I'm going to tell you how I got these price targets. I got these price targets simply off of going to the monthly chart and then just doing supply and demand. Again, you can learn supply and demand. I have a PDF on my Trading with a Dummy Linktree page. There's some free content there, as well as affiliate link to Mo's stuff, which Mo also has a course on supply and demand. So that's how I end up getting these price targets, and they've been pretty accurate, man. Ever since the bearish market, I transitioned from the daily to the monthly, and they've been hitting pretty accurate. So, well, I want to talk on Disney though real fast first, because I'm invested in Disney, so I have shares in it. The earnings was terrible. I sat in the earnings call. I was really excited, and it was crazy because I started buying into Disney in last earnings call once it dropped. Oh no, I'm sorry, the two previous earnings calls is when it would drop. I think it was like at 180, 190, then it dropped all the way down to like 140-ish, 145. So that's where I started buying my shares in. And then I kind of bought as it went lower. But what I was hoping was that the day of the earnings, it was down, I think, 2 to 3%. It was at 106, $107. And then the market closed. They were reporting after the market closed. It was up 5%. And I was excited. And I actually bought I bought it like a couple more shares as I saw it going up. And then they started talking, everything was fine. And then things just got really ugly and it started selling off. Every single question someone asked, it was just selling off, and it went all the way down to 100. My thesis at that time was that the earnings call was going to be good. Disney was going to jump up to 120, and then it would sell off as the market continued to go down to 100. That was my goal. But due to the earnings, it dropped all the way to 100. It did bounce off recently due to this possible relief rally. We don't know if it's, some people are saying the bear market's over. I don't believe it. Do you believe it?
No, of course not.
No. So this is again for just educational purposes only. These are the levels that I see just using supply and demand. I see Disney at 80. That kind of is where I'm at. $80. And then CrowdStrike. I had my my alert set at 125. It went all the way down to 129, and then it reversed. So it's up right now. And again, it's because we had like a relief rally that happened. Amazon, I've been telling people it's going to 2K. My actual alert was set at $2,021. It went to $2,045, and then it bounced up and it went up to $300. So damn it, I wish I had just bought there because I'm comfortable scaling in at 2,000. Microsoft 250. I'm sorry, 250. It did hit 250. I bought some shares at 250. My next level below 250 was 225.41. And then if it breaks that, it was 200. That's where I was really going to start buying a bunch of shares if it ends up in the $200 range. Again, it's important to understand we are in a bearish market, so this can continue to go even lower if we continue to sell off. But this is the levels that I'm comfortable at. Apple was 139.28. It went to 139-ish. I did buy some more shares there. AMD, I feel comfortable buying AMD anywhere between $72 and $85 is where I'm happy to buy it at because I do see it going back up. And then Home Depot, which has earnings this week, so I don't think it's going to hit this price target yet, but maybe 260 is what I got.
I'll say one thing about Home Depot. Home Depot, I was saying that in the watch list meeting too. Home Depot will get impacted the most, not now, later on, because one of the things that happens in recession is new construction stops, and new construction will highly impact Home Depot. So you'll get a much better deal on Home Depot, in my opinion, later on.
You think even lower than 260?
Yeah. So SPX is 4,000 right now, and most of the bear markets touch the 200 on weekly, which will go after this, which is roughly 34, 3,500, 3,500. At that point, you can calculate where Home Depot will go. It could actually go 200 or lower than as well.
Yep, that's what I'm seeing the next level from like the ticker I said 260. If it doesn't hold there, what I'm seeing next is actually 200, between 200 and oh man, dude, 140. That's a big
Because think about this,
ticker.
tech took the hit, but companies like Home Depot haven't, because new construction still, like you said, floor, like all the busy spots. I've been in contact with the realtor in Florida, in Dallas. All the main hubs, they still have buyers.
Yep.
Right now, it's impacting the suburbs, the outside area. Slowly, it's gonna get into the main areas, and that's when you're gonna see new construction stop, renovation stop, and that's what Home Depot is gonna. So basically, think food prices are up. You're probably not making as much because of inflation. Are you gonna say, "Let me renovate my bar," or "Let me renovate or add an extra room"? Probably not, right? You're
Correct.
more
Yeah.
in like saving mode.
Yeah, and lumber is really expensive too now. It's gone up like crazy as well.
Yeah.
So again, these are just my price targets, what I have for my alerts where I'm going to buy shares. Yeah, that's it. Do your own due diligence. Again, I use the monthly charts using supply and demand. So there's no secret sauce, there's no algorithm, there's nothing. I'm telling you what it is, and it's been pretty accurate so far. And if you pull up the monthly and look at all the levels, and see where the stocks have dropped to, it hit. That's how I got that price target for Square when I said 80 as a joke, because that was like the bottom of the supply and demand that I had, and it actually hit, unfortunately. So, all right. So, Mo, over to you when we pull up the charts. So, if you're listening right now on Spotify and on Apple Podcasts or any other audio platforms, this is the part where if you want to, you can tune out or switch over to the YouTube, because when you go to YouTube, you will visually be able to see the charts and stuff that he's going to be pulling up here.
Okay. All right. So here we're looking at the chart for SPX, and what we have is it's a daily chart, meaning each candle represents a day. And it's very simple. If you're getting into option stocks, you can do it. So basically, I'm using TradingView platform to draw the levels here. You can use TradingView for free. So here's what it is. So basically, the charts presented to us, the only indicator I'm adding here is called Bollinger Band. Now, a lot of people might be wondering here what this indicator is and why we have it. So lately, what we've seen is we've seen a bounce in the market. And one of the ways you could have predicted or anticipated this bounce was that we went outside the Bollinger Band. Anytime you're outside the Bollinger Band, there's a 97% chance we're going to go right back in. So if you look right here, we got outside right here and we went back right up. Now, once you understand that you're outside and you're going to jump back inside, another thing you can anticipate is it will touch key levels once it does bounce. The key level in this case is this mid Bollinger line and the top. If we are in a market where there is strength, you can expect us to reach the top. But in this case, these rallies are happening because of short covering. So I expect us to basically drop off from the midline here, which is 41.93. I think 41.93 to 4,200 is how long this bear rally lasts us. Knowing this helps you plan your trade better. If you understand demand and supply, there's also a supply zone here. So we've got enough conviction to know that this is the area we have to be careful at. Another thing that I want to show you guys is this was daily. You can also go on weekly, and I'm going to turn off the Bollinger Band. If you go and basically see historically where bear market end or they bounce off of from, it is, so it's a weekly chart, meaning each candle represents a week. It's the 200-day moving average, which right now puts us at 34.79. So you can online, based on this, put in If SPX goes to 34.79, where does Nvidia go? Where does Amazon go? You can get a rough estimate on where they all go if SPX falls that low. But this is something that I wanted to show. One of the things me and Mark will commit to is if we're giving you stuff, we're going to tell you how we found it. What we're not going to do is act like these gurus that know the world or they can see the future, because that's bullshit and that's how you betray people and their trust. So this is exactly what I use to give you what I know, so you can do it yourself and teach your friends and family members. That's it from me, Mark.
There you go. Good job. I'm glad you touched on that there. You're right. Anything that we tell you guys from now on moving forward or on our podcast, we are going to tell you how we got these prices and what our thoughts are behind what we're talking about. So you don't have to worry about forced to buy anything, or we're not going to hide behind a paywall when it comes to the stuff that we're talking about here. All right. So anything else, Mo?
That's it, man. I think this is good for this week, and next week we'll come up with something more exciting.
All right. Awesome, guys. So again, everyone, my name is Mark and this is Mo. You were listening to or watching Money Market Truths. Make sure you subscribe to our YouTube channel. Our Instagram is Money Market Truths. So definitely follow us there. We're going to try to post a little bit more on that page. And you can find us both individually. You can find me on Trading with a Dummy and Mo at OTB Clubhouse. Thank you guys for tuning in. See you guys next week.